It is once again time for our weekly market review where we analyze the stock market to see if a crash or correction is coming. And that doesn't mean that it is coming. We are analyzing the market to see if it's coming. I feel like I gotta make that point real clear nowadays as my dog runs down here to make sure I'm saying it right. Now, why do we do this? Well, it's all in the name of risk management. We always gotta be watching our downside in the market because proper risk management is how you grow your wealth year over year in the stock market. If you're not looking at your downside, then you're not investing right. And this week we got a few things to talk about, including crypto and ARK Invest. Big things happening there, and we're also covering a few other industries that we've talked about before and that you guys have asked for. One sector in particular is very hot, so let's get into it. First up is the ARK family of ETFs. You guys already know in 2020 they had an incredible run, but in 2021 they're basically having the opposite happening and everyone is flooding out. You can see their chart right now of their main ARK Innovation ETF not looking so good. Looks like it's breaking down from this midterm base as well, so look out below. And by the way, of course, as always, all this research is coming from MacroOps, our global macro research and consulting firm. And Alex, our head researcher, makes a joke here asking how could these ETFs possibly fall when they have incredible names like Palantir, which you could own for only 34 times sales. And they only have a 34% growth target this year as they see declining growth from then on. We're actually short this name in the MacroOps portfolio. You can see it's making a huge head and shoulders top right here. And what's happening with ARK Invest is happening more and more in our markets. And we've talked about this before, how social media and the internet has sped everything up. So we get all these little mini bubbles that pop constantly. ARK Invest was one of those bubbles. Cathie Wood getting hot, Tesla being attached to all of that. We're now seeing that bubble unravel. And of course, this affects the overall market. I mean, look at the NASDAQ right now. It's falling again. It just does not look good. And you'll see the other bubble in crypto is affecting the market as well. You can see here that Deutsche Bank is making the case that we're going to have higher yields going into the end of the year. So in the MacroOps portfolio, we're actually bearish long bonds looking out over the next month plus longer. And we've talked about gold and silver, right? We were big bulls back in March. And we think the precious metals market is gearing up for its next major run higher. But with that said, it takes a long time for strong bases to form so they could pop off from those bases. And gold is up against the upper range of its 10-month bull flag. If yields pop here, we could see gold chop sideways or lower for a bit. So you can see it's stuck in this channel right here. So we're getting a bit of a breather, but gold should pop again. Inventories are currently at extremely low levels, especially considering the rebound in growth. So Deutsche Bank again says that the risk is clear. Inventory levels have fallen to multi-decade lows at retailers, and many businesses will likely not have enough inventory to satisfy customers as the economy recovers and all this demand comes back. This is especially true for retailers that rely on just-in-time supply chains. So you can see here pre-COVID retail had a lot more inventory than they do now. So just-in-time might quickly turn into out of stock. I know this isn't the same thing, but I still can't get a PlayStation 5. But that same feeling is going to extend to a lot of different goods soon. The Baltic Dry Index just hit 11-year highs with no signs of slowing down, which means there's some good trades in dry bulk shippers. Many tanker names are setting up as well, such as Scorpio Tankers, STNG. It completed a year-long inverted head and shoulders bottom, which you can see right here. And the measured move is up to $30 a share. So these charts are a little blurry, but you can see it's currently at $20 right now, so that it would be a nice move. Now, we're still thinking that we're in the middle of a buy climax right now in the indices that will likely end in the next few weeks or months. So we talked about this in previous videos, but if we look at this monthly chart of the S&P right here, I mean, look at these bullish bars. And the previous month of April, super bullish bar. So this vertical takeoff is kind of telling us that, hey, yeah, this is the buy climax happening. And at this point, we're more towards the end of that climax instead of the beginning. So it looks like after the climax, we'll see expensive US stocks chop sideways in an extended range, while cheaper unloved sectors like staples and utilities start to show relative strength. Now in a second here, we'll talk about how crypto is actually affecting that buy climax. And we already talked about one sector that's ready to explode during this, right? The shippers. Now here's another one. You can see here that Chinese thermal coal futures are trading at decade highs as plants increasingly switch to the dirty energy source following higher natural gas prices. So around the world, people are switching to coal because other sources of energy are too expensive. And coal prices are now highly competitive in the US. So a really good contrarian trade right now is US coal producers. And you can see by the chart of one of the names we're looking at, BTU, which is Peabody Energy, it's been beaten up hard. But there is a huge inverted head and shoulders bottom forming. And when it busts out of here, well, we're going to get a real nice run. So this is definitely another name you want to add to your watch list. So as we already talked about, we think we're in a buy climax right now and that afterwards the market will go sideways. Well, one of the things affecting that buy climax is the crypto market because it's become so big. Crypto could actually be stealing the equity market's thunder at this point. The total crypto market has doubled to over $2 trillion since the start of the year. And this is old data too. This is before the whole Dogecoin pump and Ethereum taking off and everything. So it's actually bigger than that now. I mean, look at this growth. It's insane. The combined market cap for NFTs has risen almost 2 2,000% since the beginning of this year, and its total market cap is at 28 billion now. Again, a chart from last month. It's likely even bigger now. So if we add up crypto, which is 2.1 trillion, and NFTs at 28 billion, and then the Coinbase IPO at 50 billion, you get basically a whole nother apple of 2.2 trillion getting put into the equity universe. And remember how we always talk about how stocks and bonds, they compete for money? Like if money is flowing into bonds, then it's coming out of stocks. Same thing vice versa. If it's going into stocks, it's coming out of bonds. Well, now you got this third group of crypto fighting for that same amount of money. That's why we said it's adding a whole nother apple into the equity universe. So it's taking a lot of the flows. So if you look at the total market cap for US equities, it's currently at 49 trillion or 110 trillion globally. So the crypto market is basically adding an additional 4% of new supply relative to the US market, or just under 2% globally. And we're talking about supply here because, as we've said before and as we always say, all this stuff comes back to simple econ 101, supply and demand. The way those two things are interacting with each other is how you get prices in the market. If there's more demand than supply, then prices are going to shoot up. More supply than demand, prices are going to fall. So what we're getting here is 4% in new supply. Now, one of the biggest drivers of demand in the US market is buybacks from companies. So in 2019, we had total buybacks of 787 billion. And that's what really helps push prices higher. But compare that to how much of the crypto has entered the market in supply, you can see how bringing in over twice that much in new supply would be a headwind for equities. Again, more supply than demand coming, so what are prices going to do? Fall. So it's important to remember that prices in the market are set at the margin. So an additional 4% in supply is not nothing, it's actually really material. So again, Ethereum's market cap has gone up by one PayPal since the beginning of the year. Dogecoin is appreciated by one General Motors, at least before the whole SNL thing. Trash coins, the technical term for cryptos that were created as a joke or a way to scam people out of their savings, now have a total market cap of over 500 billion, or one Visa. Lots and lots of money. The point here is that these market caps represent serious flows. And we're talking about cash flows here that would have otherwise gone into traditional assets like stocks. But all this money flowing into crypto and crypto related things is hindering the market's ability to climax in a traditional fashion, which is why we're seeing this really weird action in the market. I know a lot of you have commented on previous videos about how weird it is. Indexes are going up, but a lot of the stronger names are falling, and this climax is lasting longer than it should because it's getting dampened by the crypto markets. And another indicator I use, because I'm on YouTube and I get data of what people are looking at, well, I know everyone has pretty much moved into crypto. My channel is nearly dead at this point because we mostly focus on stocks and general macro. We're not a crypto-based channel. So it's very interesting to see just how powerful this crypto trend has been. And whether or not it's enough to cap this buy climax completely or not is anybody's guess. So we're expecting a buy climax, but maybe crypto completely ruins it. And we just see sideways chop, which is another scenario. Because that's what we do here, right? We only gauge probable scenarios. We never know what actually is going to happen. If you knew that, well, then we'd all be billionaires, right? Trillionaires, actually, if you could predict the future. So this is something to keep in mind as we navigate this late stage trend. Now, all the signposts are telling us that we're likely going to head higher before this run ends. But the evidence isn't strong for either direction, so we got to stay nimble. That's why we do these videos every week to constantly check up on the market. Now, at the top of all our research, we always have a quote from one of the greats. This one is from Barton Biggs, who wrote a lot of hedge fund related books. He said, "A glittering resume helps a lot in getting a job, but a majority of the winners I have known have undistinguished pedigrees. Brain, guts, drive, and intuition puts the points on the board. Performance investing is a numbers game." And I love this quote because it is so true. It doesn't matter what your background is when it comes to the stock market. You don't need a fancy pedigree. You didn't need to go to an Ivy League school. Anyone can make it in the market. Dan Zanger, who has like the world record for the most returns in a year, he was a pool builder before he went into the market. Bruce Covener, a market wizard, he was a cab driver, and now he's a billionaire. So when I tell people that, hey, no, you don't need any fancy background to do this, it's true. A lot of times, the dumber you are, the better you do, because you don't think so much of yourself and you don't have all that ego saying, no, I can't be wrong in the market. I'm always going to be right. The dumber you are, the more likely you are to change when you're wrong and actually focus on making money instead of doing some complex stuff to prove yourself right and show off, which often happens with engineers, doctors, people with, high-level degrees. Of course, a lot of them are successful too, but I also see a lot of times your smartness actually holds you back. Now, one thing that will absolutely help you be successful in the stock market, and it's probably the most important thing, is emotional control. So right now, you can see equity markets aren't that fun. There's a lot of volatility. People are getting chopped up and thrown out all over the place. So it's during times like this where you really got to stick to your strategy. And we already talked about it a bit in this video, like the ARK Invest, what's happening with them, right? And I said it was a massive mini bubble. Played out real fast, right? Well, the same thing is kind of happening in the crypto market with all these meme coins. And what's tough here when you're running a strategy, if you're in a drawdown, you're thinking, oh man, is this thing broken? Is it ever going to come back? Should I switch? Should I end the strategy and go do something else? And this is where that emotional control comes in, because because yeah, it's going to feel bad during down times, but it's during these times, if you power through, you're going to be there for the upswing once again, because all these mini trends happen, right? Money flows over there, it flows back over here, but you just got to be ready when it comes back. So when everyone gets beat up in crypto again and comes back to stocks, you want to make sure you're operating your strategy properly. So really, the best time to get into a strategy is during a drawdown period when the markets aren't looking so great. That's where you could set yourself up for success when things turn around. And as always, if you want to learn exactly how we run our strategy, then just check out our free training right here. I'll put a link to it in this video and down below in the description and comments. We teach you the exact step-by-step method I myself use and all our Fallible members use. It's a great time to get started. I'm going to put a link to that training right here. So click here and I will see you in that training.